Now, Absa Bank Kenya made 6.3 billion shillings in net profit during the first 6 months of this year, representing a 13% year-on-year increase driven by accelerated lending. As the economy continued to recover from the COVID-19 disruptions, shareholders will pocket an interim dividend payout of 20 cents per share.
During the first 6 months of this year, Absa Bank Kenya saw its net loans and advances increasing by 19.49% from 218.72 billion shillings to 261.54 billion shillings. In addition, the lender's stock of government securities increased by 16.37% from 77.06 billion shillings to 89.68 billion shillings. This helped Absa Bank Kenya earn 13.35 billion shillings in interest income from loans and advances, as well as 4.55 billion shillings as interest income from government securities. The lender booked 14.43 billion shillings as the net interest income, which in addition to 6.48 billion shillings in total non-interest income, pushed the total operating income to 20.91 billion shillings.
What I think is exciting for us is that, as you can see from the slide here, when we look at the trend, we're accelerating the growth of our revenues. And our revenue base has grown by over 10 billion shillings over the years. And that's largely off not just organic growth, but investments like I indicated in new business streams. And that has brought us to be much more a financial services group rather than just a bank, with our much broader proposition set that I mentioned earlier.
On the other hand, the total operating expenses increased from 9.89 billion shillings to 11.79 billion shillings on account of increased loan loss provision. The lender increased the loan loss provision by 52.16% to 2.96 billion shillings after the gross non-performing loans increased by 7.88% to 19.79 billion shillings.
So remember what I mentioned, the yield curve picking up, the interest rate environment in the country picking up. You'll be able to see that we've managed to contain that changes in cost of funds. So picking up by only 10 basis points from 2.3% 1 year ago to about 2.4% in this financial period.
The lender has proposed an interim dividend payout of 20 cents per share. Ndita Mokami for Lunchtime News.